Hi, I'm Larry Berman, and here's what's on my radar this week. Well, looks like stimulus negotiations are back on, but when you talk to the people in the know, while we need it sooner rather than later, it really doesn't look like anything would get written into law until February. This is very different than the December 11th expiry of the budget bill, and we're going to need a continuing resolution. So there's 2 degrees of negotiations right now on terms of spending. Pelosi on Friday was very key to say the current conversations she's been having were more about the stopgap spending than funding for COVID relief. In terms of the global marketplace, Brexit, EU budgets, all this coming to the fore in the next couple weeks. We have a year-end date, of course, for a drop-dead date, again, for Brexit. We do think there's going to be a deal. It's not going to be the best deal possible, but it's going to be a deal where we really like the UK market. We really like the British pound. They're both buy on dips. They're some of the cheapest assets on the planet, and we've been nibbling away in our portfolios in the EU. We heard this week that Tesla was actually going to be now included December 21st on the rebalance of the S&P 500. So that goosed the stock tremendously. The only reason you're buying the stock today is for this index inclusion. Make no mistake about that, it's purely speculative. When you look at the average analyst price target, and analysts on Tesla are almost all raging bulls in general, their price target 12 months out is about $350, currently trading near $500. So December 21st index inclusion, what's likely going to happen based on the mathematics of indexing is it's going to come in around 7th, 8th, 9th in terms of market cap, little right around J&J, JP Morgan in that range. So all the stocks above that, which are all the names you know, the Google, the Apple, the Microsoft, etc., those names are going to need to be sold in a much higher proportion than everything else that's tinier than 1% to fund that rebalancing of the index. So in terms of our bear trade of the week, we want to be short the FANG names, in particular, if you're looking at individual stocks, against Tesla for now. But PSQ would be a bear ETF way to play short NASDAQ. We've played it in our portfolios by buying a ratio put spread for the December 18th expiry just before the index inclusion. You can do the year-end one if you like. We're looking at 2 or 3% out of the money to 5 or 6% out of the money. We think that's about the right mix of weakness potential in those large cap tech names. So a 283, 272, 2-to-1 ratio put spread, which would get us long technology coming out of it for a rally into Q1 that's liquidity driven. So that's a way to play the bear side. You know, when we look around the world globally, dividend paying stocks in Europe still lagging tremendously. My favorite series of ETFs in the BMO world have been the high dividend covered call strategies, yielding north of 7% right now. ZWE currency hedge version, ZWP if you want the exposure to those European currencies, which I'm leaning more and more to these days. Hope everyone's doing well. Remember, follow us on YouTube and sign up for the alerts so you know when new content is posted. Have a great week, everybody.